Good afternoon, it's Midcap Radar time. We are reacting to results from Polycab on a day when the Midcap index is down 1400 points. The stock too is reacting to results down 7%. But Vivek, there are plenty of earnings lined up through the course of the day.
Good afternoon, Hormaz. Plenty of results today. It's a big day, especially as far as some of the heavyweights are concerned. But it's a day where it's directionless, especially as far as the benchmark indices are concerned. The broader end of the market seeing quite a bit of pressure. So let's have quite a lot lined up on the show. Let's start off with the top headlines. Nifty, Sensex struggle to find direction. Mid-caps take a beating. Realty and industrials are the big losers, while IT manages some green.
MCX rebounds from Tuesday's fall after UBS issues a buy rating with a target of 7,800, says that revenue growth was slightly lower than expected due to a decline in non-trading revenue.
India Mart shares plunged close to 9% on the back of weak third quarter earnings, marked by a decline in quarterly paying subscribers. Nomura downgrades the stock to a reduced rating, slashing the target price to 1,990 rupees a share.
Signed DLM is among the top losers on the broader markets after a mixed show in its third quarter, while revenue came in stronger than expected, but higher employee costs impacted margins and profits.
Tanla platform slips over 6% after reporting another muted quarter, sees flat growth both sequentially and on a year-on-year basis in Q3. Welcome to Midcap Radar. Well, it's a screen that is completely red. If you pull up the advanced decline ratio or the number of stocks that are losing compared to the number of stocks that are gaining, this particular spread or this particular ratio is clearly skewed in favor of the laggards. NSE declines when you're looking at the screen, over 2,000 stocks losing, only around 330 stocks gaining. We just had the results of Polycab some time ago. That particular stock seeing quite a bit of a strong sell-off immediately post the results. But we have quite a lot of stocks that Vamakshi is standing by. She's at the wall. This is our special segment, Midcap Movers. Vamakshi, take us to the midcaps that are moving around in the session.
Well, absolutely, Vivek. Not a great day for mid-caps, right? When we look at the list of the stocks that are losing out in trade, lots of names come up. As you said, the advanced decline ratio largely in favor of the declines. Look at NetWeb. The stock has continuously declined from the day's highest point. Today, the stock is down and out nearly 11%. Keynes Tech is another counter that is seeing a very sharp fall of almost 10%. PB Fintech and Sirma SGS Tech are some of the other counters that are declining in trade today. This time around in the earnings season, there are lots of stocks reacting to their numbers, and good numbers are being rewarded very well, while the bad numbers are being punished. When we look at India Cements, that stock is down nearly 12%. Signed DLM, India Mart and Tanla platforms are reacting very sharply to their numbers. Jana SFB, on the other hand, when we saw their asset quality improve, the stock is seeing a surge of almost 16%. Apart from that, Realty stocks continue to remain under pressure. In fact, from the highs that they made in December, the Realty index is down nearly 25%. Oberoi Realty, Prestige Estates, Godrej Properties and Shobha are some of the counters that are declining in trade today. But on the flip side, we have some stocks that are gaining in trade in such a weak market. Bombay Burma up nearly 3.7%, LG Equipment up 2.97%, MCX after seeing a sharp fall yesterday has seen a good recovery up nearly 2.8%, and Easy Trip also up in trade. Apart from that, lastly, let's also look at some of the stocks that are in focus on the back of strong volumes. CG Power is down nearly 5%. Kalyan Jewelers continues to decline in trade. PB Fintech and Sterling and Wilson are some of the other counters that are down and out on the back of strong volumes as well.
Vamakshi, thanks a lot for that. By the way, Polycab is now down 8%, is down to the lowest point of the day. And by the way, the numbers were not bad even when you compare them to estimates. The EBITDA was up 26.5%. It was better than expectations. Margins too expanded. They too were better than expectations. But the stock is reacting to those results. Mind you, Polycab has also been an outperformer in recent times. So the valuation concern for a lot of these companies are also weighing in on the kind of reaction that you are seeing on these stock prices post their results. But 8% lower now on Polycab, or 16% down in a month though. We'll get you more details as the show goes by, but let's get in Jay Thakkar now from ICICI Securities for a quick chart check. Jay, good afternoon. Thank you for joining in. The concern right now is not the index, because the kind of fall that you are seeing in the broader markets, the index has somehow taken a back seat. But is there more pain that's in store for the broader markets, so the mid caps and the small caps? What are the charts indicating there? And couple that up with your stock recommendations as well.
Hi, very good afternoon to you, Hormaz and Vivek. Well, see, broader markets definitely, as you pointed out, the breadth is quite negative, and we have seen a good amount of sell-off there. I mean, it's lately playing out there because we already had seen a correction coming in the Nifty and the Bank Nifty, and now the broader markets correcting since past couple of 2 days. And the lows are yet to be broken, Hormaz. If you look at the mid-cap index, I mean, 52,248 was the low, and it's still trading at around 450. So I think it's still to break its low by 200 points and move lower. So from here on to the weakness is likely to continue on the upside. We believe that 54,000 on the upside till those levels aren't taken off. The Nifty mid-cap index trend is negative as far as the Nifty small cap index is concerned, Hormaz. I mean, the recovery which we had seen for almost 5 to 6 trading sessions has been wiped off in 2 trading days. That is yesterday and today. And the low made out there was 16,800. It's still trading around the levels of 16,950, 955 levels. So the low is yet to be broken by 150 points, and the way the momentum has weakened, Hormaz, and the way the kind of breadth weakening and the shorts that's getting built up, the probability of these lows getting broken is quite high by around 200 points in mid-cap Nifty and around 150 points in small cap. And once that happens, we will see further weakness coming in. So yes, the pain is likely to continue in both of this as the weak, bounce has been, now been reversed with the sharp sell-off which we have seen since yesterday, and the momentum is completely reversed from up to down in 2 trading sessions. As far as Nifty is also concerned, I mean, 23,000 level is the level to watch out for, wherein we have good amount of put writing that has taken place. I mean, once it closes below those levels, I mean, today, tomorrow, whenever, you will see further weakness in Nifty coming in as well. And below those levels, we'll immediately see 22,800 to 22,500 coming in Nifty as well. So trend remains negative, Hormaz, till we don't see a clear evidence of a reversal from down to up. Hence, I have 2 sell recommendations. The first one is on, Siemens. Now, Siemens has been forming low tops and low bottom. In fact, Hormaz, I would say that Siemens had broken down from its sideways consolidation range of almost 1,500 points. And, now on the lower side, we are targeting around the levels of 5,500 in the near term. That's the immediate target. And below that, you can see the levels of 5,350 as well. On the upside now, 5,900 to 5,950 will act as a very crucial resistance. So till those levels aren't taken off, the overall trend in Siemens remains negative. Hence, we have a sell recommendation out there. And one more stock to look out for is HAL. I mean, there is where we have continuously seen low tops and low bottom getting formed. The momentum is also weak out there. So HAL can also be see or witness some further sell-off from here on. The previous lows are likely to be broken. On the lower side, we are expecting around 3,700 levels to be tested. On the upside, 3,900 will act as a very crucial resistance. So one can sell now, one can sell on rise as well. But HAL, Siemens, these are the stocks which are looking back negative, as well as Polycab also, which we were just mentioning. I mean, it's reversed after a long uptrend. The long-term uptrend line has been broken. The indicators are in sell mode, and we are now seeing fresh shorts getting built up out there as well.
Understood that, Jay. Thank you so much for joining us, giving us a view on the markets as well as stock-specific action. Well, some important flashes just came by on your screen, at the bottom of your screen just a while ago. Polycab actually has said that it intends to go ahead, and they say that they would be able to achieve a higher revenue than what they had earlier anticipated at the start of FY25. So some strong commentary coming in. Remember, we've had 3 WNC or wire and cables companies that have come out with results: Havells, KEI, and now Polycab. Havells was a muted set, KEI inline, and Polycab at this point of time with the commentary appears to be a good set, but clearly market is not in a mood at this particular set of numbers. Markets actually have seen given it quite a bit of a thumbs down as far as this particular sector is concerned. Hormaz, you wanted to comment?
The important announcement that they have made is the fact that they are going to achieve their FY26 revenue guidance of 20,000 crores in FY25 itself, is what the management of Polycab is saying. As you can see, the flash at the bottom of your screen, for the first 9 months, their revenue stands currently at 15,422 crore. So we'll keep an eye out on Polycab. The stock, though, still down 8%, despite some positive commentary coming in from the management on the road ahead for the company. The time to take a short break. We'll be right back. But before we do that, India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. You get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app now from the Apple Store or the Google Play Store. You can just scan the QR code on your screens.
Welcome back to Midcap Radar. Well, we are now joined by Vijay K. Tadani, Vice Chairman and Managing Director, NIIT MTS, to decode their Q3 results that just came about. Good afternoon, sir. Thank you so much for joining us. First up, at the end of Q3, would you continue to hold on to your FY25 guidance of 7% revenue growth and margins in the range of 22 to 24%? End of FY25, will you be at the upper end of the guided margin band?
So first of all, the answer to your question is yes. At the end of quarter three, I think quarter three has been good because we have a rebound from a -2% QOQ to +5% QOQ. And I think that momentum will carry it through in the fourth quarter. And therefore, we are holding on to our revenue guidance for the year. On the margin, I think we're doing a little better, but we would be in the upper end of the range of 22 to 24% that we had said in the upper quadrant.
Mr. Tadani, good afternoon. Thank you for joining in, and also congratulations on the quarter gone by. You know, what has the current quarter looked like so far? It's still early days, of course. It's just 20 days into the quarter. But how are demand trends panning out? What are you witnessing on ground when it comes to demand from, say, from your large clients or even from your smaller ones?
Yeah. So I think the overall economic climate, if I was to say, till end of last week was approximately the same. Of course, this week, the economic climate has shown a change, but the impact of that will be known over the next few weeks and months and maybe years. But definitely that the status was same. The uncertainty was high. It was a challenging environment with so many moving parts in the environment and in the economy. And I think the focus of everybody was on cost optimization, customers, and therefore that's normally good for us because it also means that the propensity for outsourcing will increase. We are in a very, very specialized niche of learning, and therefore we become natural candidates to be invited for any such discussion. Our win rates have been very good. I think last quarter, we have been able to get 2 new MTS contracts. We have been able to get 3 renewals and multiple expansions. So I think our overall revenue visibility has increased to $391 million. So in other words, in terms of customer acquisition, scope expansion, and involvement with customers, I think the going is good. I think what we have to see is the coming back of the spend on learning, which at a certain time was subdued, but is now beginning to recover. So I think that, in a sense, will describe the environment. But I think going forward, we should see more exciting times next year, but too early to talk about that. We are in the planning phase ourselves. The world is also in a little bit of transition as we go through the next few months. So I think by next quarter, we'll have a clearer picture of how the next year will come out.
Completely understand that, Mr. Tadani. If we could push you to quantify, when you say much better, would you be able to give us a ballpark figure for FY26? What is it that you're anticipating in terms of top line margins as well as profitability? Another sentence, that we just picked up from your investor release is that you've said that volumes in the management consulting business have been impacted, number one, due to the moderate environment and also a push for cost reduction. What exactly is transpiring in that particular space? Q4 FY26, how do you expect that to pan out?
Yeah. So let me answer your first part. I think too early to quantify how FY26 will be. Our long-term guidance for this business, as well as our long-term vision for this business, remains intact. We have shared that on a number of occasions. And I think on that, we continue to feel very, very comfortable based on whatever we have been able to do. But I think getting a clearer picture will emerge maybe 90 to 120 days from now. As far as the challenge which we saw in professional services and consulting part of our business, that it actually came from environment forces where I think there has been a cost optimization drive at their customers' end, and therefore that reflects itself in their own spending patterns. And that challenge has been going on for the year as uncertainty was high. But I think as things are becoming certain, I think in coming quarters, we will start seeing the picture emerging. But last few quarters we have been affected by.
All right, Mr. Thadani, thank you so much for joining in. Wish you good luck for the rest of the year as well. That was the management of NIIT Learning on the road ahead for the company after their third quarter results. Time for a short break. More on the markets on the other side. We await results from HDFC Bank. Stay tuned. You can see the recovery on your screen from Polycab after an 8% drop after the results announcement. The stock is recovering from the lows of the day after some positive management commentary that it came with regards to the revenue guidance which it planned on achieving in FY26, and it now says it will achieve that 20,000 crore mark in FY25 itself. Well, as a back of the envelope calculation of 15,422 crore means that they would need around about 4,800 crores in the fourth quarter to achieve this guidance. The stock 3.5% off the lows of the day. What is at the lows of the day though is HDFC Bank, and we are awaiting results from the Nifty heavyweight. Opened higher, was higher for most parts of the day, but now has seen some bit of selling pressure towards the final few minutes of this in the final few minutes. Of course, 0.8% lower HDFC Bank. We await results on that. We call time on Mid Cap Radar. From Vivek, me and the team that put this show together. Thank you for watching. Your stocks on the other side.